Yo, what is good, guys? I hope you all had a fantastic weekend. It was homecoming weekend here in my college, so a lot of partying. I went to a party yesterday. There must have been like 200 people in two people's backyards, like there were two houses next to each other, and they destroyed the fence. And there were like a bunch of cops, public safety. Um, I guess your typical college day or college weekend. And then I went up north to a friend's house, continued the partying there. So really fun weekend for me. I hope it was the same for you guys. But time to get to work. We got a crazy week ahead of us, and yeah, let's just get right into it. So, to start off, we're just gonna get. This shouldn't be too long of a video. Um, we're just gonna keep it simple, not too much to say. So first off, Bitcoin. This has really been holding up here, in the low like 19,000 to I guess high 18,000s, and this has been conflicting with my, I've been a bear on SPY for kind of a while, and this has just not been lining up because every time SPY's been trying to push those new lows or even going lower, Bitcoin has been holding this level. So Bitcoin could be seeing a big reversal here that would line up for what I think could be coming here, a turn of the tide. So watch this whole thing through. I really do recommend it because if this move happens, what I'm expecting, it could catch a lot of people off guard. So be prepared for what's coming. What could be coming. But that's it for Bitcoin. You could see a reversal maybe back into the low 20,000s. So oil, this thing has been running like crazy. Broke out of this wedge, and right now it's retracing. And retrace. I don't think it's done running. I think you could be moving up into the 100s, maybe over 100. So this just could be half of the move so far. Get your ABC out of the wedge, C wave up into the 100. So we'll see how it does. We want to hold up. It could maybe go a little lower, but I'm keeping an eye on this. Join the Discord, so you can see when I enter this, because there's a lot of money to be made on this. You could have made a lot of money on this move, and you might have one more move coming up. So I'm bullish into the winter. A lot of fundamental factors and reasons for that. So keep an eye on oil. I don't think it's done yet, but we're gonna move on to the US dollar. Slamming into that trend line. You cannot go up at this rate into a trend line of this significance and then blow through it and keep going. That's just not how it works. So I do think you could be seeing some more relief on this. We'll see how it does early on this week. Not too much else to say. So Apple here, bouncing off of the 0.786 of this fib channel, as well as holding this region that was in my last video. So there's a lot of support on Apple here. Divergences, MACD wants to curl. So Apple, I don't think it's the best time to be a bear here. There's not a lot of incentive to push down at the moment. You're kind of in that oversold territory, so if anything, I think I would be expecting a bounce on Apple. You're also testing the ADX and the negative DI. So, if this crosses through, you're losing that confirmed bear turn. So Apple could be setting up for a bounce. I would recommend seeing what it wants to do early on this week. Tesla, very tricky here. A main reason for it being so tricky is this volume node. Now, there's no really, protruding regions of this volume node where you can see significant supply and demand zones. It's really just this bell curve. So it's hard to say because I also talked about this in last week's video. It's hard to use these if there's no protruding regions. So you'd want to see this, except right here, and you could say, oh, it's a demand zone, I would expect to bounce here. But because there's not, you have to look at these candles and price actions. Give me a second, I gotta charge my computer. Alright, sorry about that. So anyways, you're bottoming out, or not necessarily bottoming out. You could be bottoming out here because, first off, you have a lot of reactions in here with these candles bouncing all in that same area, as well as you've really oversold here. So we've been waiting on this pattern to play out for quite a while here. It finally happened. You got these really choppy price action kind of bouncing in and out of this triangle, above and below all of these supports and resistances, and that move finally happened. And you could be seeing relief soon. You got the negative DI going through the ADX already, so you could see a bounce on here. We'll just have to see what it wants to do early on in the week. A lot of this stuff has to do with what happens Monday, Tuesday, because you're really testing these breaking points, but it's unlikely those breaking points break this time. So we'll see what happens. If something does happen, I'll make a video and explain what can happen. But you'll see a lot of this is going to revolve around my SPY analysis. So make sure you watch the whole thing through until that explanation, whatever it is. So biotech, not too much to say. Really just watching this upward trend line because I'm starting to see some bullish pressure building up underneath this trend line. Normally you would see this kind of just continue down, cascade down into the bottom trend line, but it decided to curl up and test that trend line. So if it wants to break this trend line, I could see this moving up to fill that gap in the high 80s, and on its 3x leverage ETF, that would be, so if this move is 13%, you could be seeing like 40% on its 3x ETF, which would be LAB UAB or LABD. So yeah, LABD. So 40% if it, or no, sorry, LabU, bull ETF. So if it decides to break this, you could see a nice move up to the upside. As for XX, this is a big one I'm watching right now because there's a lot of incentive to turn here. You're hitting these solid supports here. You got gaps above. You got some tiny divergences here. The divergences aren't really the main thing. It's more rather these supports right here. And you're in this really steep channel, which you cannot do this forever. You can't just only go down or only go up. That's just not how it works. So if this decides to break out, there is a lot, and I mean a lot of upside on its 3x ETF. So if it decides to go up from here into that upper gap on its 3x ETF, that's like 75%. So SOXL, that's the 3x ETF. Now this has slightly of a different picture than SOXX because you got some gaps that are acting as incentive here. So if it decides to move up to fill this gap from here, that's over 100%. So this thing has been getting destroyed lately, and it's created a lot of upside in that process. Now it's also at this volume node here, which I've been pointing out in the past few weeks, just kind of waiting for. So you could see relief from here before going even lower. Probably in the coming months, we could be seeing relief for a few weeks, few months. So you're going to see my explanation on that on SPY. So stick around. I promise you, you're not going to regret it. So you're also in that channel. You could break out even up to this gap. Let's see. Up just to this gap, 60%. That is insane. So keep an eye on this. Keep an eye on SOXX if you want to wait for confirmation. Watch for this trend line to break. And that looks like the low 300s. So keep an eye on this. There is a lot of money to be made. So onto the VIX. You're in this congestion zone. You got a double top here. Divergences on the MACD, RSIs. So VIX could be topping here. You know, Thursday was really the day to break this and just go flying, but bears did not follow through. You'll see me talk about that very soon. But they failed to push through and fly to the skies. So still in this congestion zone. Failed to break out of this actually as well. You know, you've been getting dojis and wicks above it. So yeah, I actually haven't been paying attention to these candles, but it has not really closed above this trend line. So that is very interesting. You could see a cool off on the VIX. I would not be surprised, but if it decides to break this congestion zone, there is quite a bit of upside here. I'd be looking between 40 to 60. That's really where you see that fear kind of peak. So I don't really think that's gonna happen yet. But on to actually, first off, before those two, I'm gonna point out some stocks I'm watching as opportunities. Just if you want something to be looking at, watching CRM. It's in this channel. You got a gap right here. A lot of VPOCs acting as incentive to test liquidity. So I believe there's also divergences. Yeah, massive divergences. So CRM, you could see this curl up to the upside, and NEM and EM. So this one, you would want to see this trend line get reclaimed, which honestly I think would be kind of likely. RSI testing that moving average, but above all, you'd want to watch for this trend line to get reclaimed, because if it doesn't, it's just gonna waterfall down. But it's really oversold, so you could see this curl up, and that big resistance I think is where it would move to be honest. there's a lot of incentive to move up there, hit it hard and reject later on in the year 2023. So got a nice little gap here, so keep an eye on this. It does look like a nice setup to me. Just you'd want to see that trend line reclaimed. Now on to SPY. Not too much to say. So first off, I'm going to talk about why we bounced. There's three main reasons. First reason being, I think this is the biggest one, we hit the 50% retrace from the COVID lows. So this is the reason why I think we got such a large bounce. You had long-term investors going in here at this level, and just FOMO, short squeeze. There were a couple of reasons, but I think this is the biggest one. And then the big channel line, I guess I deleted it. Let me put it back up. So it was in this trend line, I believe, to, yeah, right here. So roughly you get the point. I'm not going to waste time trying to make it like as perfect as possible, but this was a line I had on my Twitter. Make sure to follow me on Twitter. I think it was in my last video too. I kind of forget, but this is one I've been watching this past week. And which time frame was it? 15 minute? 1 hour might have been the 1 hour. So I think it was the 1 hour here. So yeah, I think it was the 1 hour. So you can see we really jumped right back above it and squeezed like crazy. So, and then this was that channel line that I was watching, and on ES, an expanding triangle right here. These are all the paths I'm going to explain at the end of the video. The scenarios I think we'll see play out. So let me take these off quick. They will be back up in a little bit. So right here, expanding triangle here. You bounced off the bottom of it and went all the way back up to the top side of it. This was insane. Historical rally, third biggest intraday move in the history of the stock market. So really a historical day. But anyways, those were the three reasons. That 50% retrace, the trend line right here, and that expanding triangle trend line. So those were the three main reasons we bounced. And now we're going to zoom in here, and I'm going to explain what happened, why this happened, just kind of explain the thought process so you can understand the picture here. So the bears failed to push through here. Let me see. So I'm going to show you something from the Discord, but I think I want to do it in this order. So yeah, this rally failed here. Actually, yeah, I'm going to show you the Discord message. So this is really unfortunate. The bears literally had a divine setup here to absolutely crush the markets and continue lower. Right here, that was the level to break. It held that open of day, and that was really unfortunate. A lot of people FOMO'd in into shorts right here. A lot of people just started shorting because we broke some pretty big psychological levels, and everyone's like, it's a guaranteed short, and that really backfired, as you can see. So once this happened, I was in shock. I really genuinely was in shock. I was like, holy, this is insane. Someone in my Discord turned 10,000 into 230,000 in like 3 hours on XPX call options. That was crazy to watch, but yeah, big money was made on that rally. And anyways, I'm getting a little off track here. So yeah, this is what I was expecting. We would retrace. So I held my short, which I was shorting from 377 like 2 weeks ago, I think, on this third. So I want to explain this quick. I think I actually explained this in a previous video, but I shorted on this third touch point here because I saw this triangle. It was really bearish, and as you can see, you got an island top, you reversed down, and I closed that short in the morning here. And when I saw this retrace fail, because you could have gotten this bounce and then moved up to 380, which did not happen, I got back in my shorts and held it down to the gap down. Now I did not even consider closing my short here. Now I could have, but it was under so many big levels. 340 looked like a lock with that demand zone. So I got tricked out here. I held through the squeeze because I knew there would be a B wave. So I'm trying to think of the best way not to make it sound like all these jumbled upwards. So what I'm going to say here is there were three possibilities. First off, so let me put these, give me a second. I got to set it up so I can really explain it fluidly. So you draw your fib from the low to the bottom, or the low to the high, and you get your fib retrace levels. So you also had this wedge here. Actually, I want to point this out quick so you can kind of just see what I saw. You had this wedge. Wedges like to retrace to the 0.382, and they usually do. In very rare cases, the 0.236, but you retrace right down to the 0.382, and that's where you bounced before getting this kind of extended wave up. But that's not what I'm talking about in this video. So let me put the fib levels back up, and then I'm going to explain the 3 scenarios that could have happened. So, and they're all still in play technically. Well, you'll see what I'm talking about. So first off, the first possibility was, so this was the structure I was looking for, right down to 357. That's what we got, right down to 357. So the first possibility was we only retraced to the 0.236 or the 0.382. Now this is where I closed my short, because it was possible we could bounce from right there, and I started going long right here. So and then you could move up to the 380s. So, and you could have done that from both of these levels, but the squeeze would have had to have been so violent for us to hold here, and we just went up way too fast, way too high, way too fast. So the second scenario was the 50% of the 0.618. So this is where it has to hold in order for it to be bullish. Now, if it breaks this, you could go lower, and that's that other scenario. Lastly, we could fail all of these supports, and go lower. So I believe I went long at the 50%, and I said I would wait till Monday to add to the long position or reevaluate, because you can still go to the new lows, which is unlikely, but I don't think that's gonna happen. So I don't have too much more to say. I want to explain the squeeze quick, and then I'll explain the scenarios. So one, it was a short squeeze, but it was also supported by volume. So if you look right here at these volume candles, this move was supported by volume. So it wasn't just a short squeeze. You don't have to return to the mean reversion, which happens in short squeezes where it's not supported by volume, it's just short covering. So in short squeezes, with that short covering, you don't need buying volume to produce that, kind of that melt up. So this was a short squeeze, FOMO, like actual buying. I'm wasting my time on this, but the point is, if this was supported by volume, which also supports the case of this being a reversal candle, this was a very strong reversal candle. Yeah, a lot of reasons. So zooming back in here, I think I'm ready to explain these scenarios. So give me a second here. So it held the 0.618. Well, technically it's doing that in futures right now. Had a double bottom, which is very important here. If it fail, it can still fail it. You're gonna want to see it. The level you want to see break is 3665. So right here, and if it does that, it's very likely it's going to continue up towards 380. So I'm gonna draw those paths out, and that will be the end of this video. So give me a second here. So I'm trying to think how I'm gonna map this out. So we're gonna go to the 30-minute, and yeah, so also you're in this really big channel here. Something to note, something to be aware of. Yeah, kind of interesting. So let's cloud it up. Give me a second. So alright, first off, from this high to this low here, your first level of incentive to move to is the 0.382 right here. Now this lines up with that this low right here, which was that level I was watching last week to get hit. Now it did not get hit because we did not retrace on the way up. It was straight all the way up. So now if you did something like this, then it would have been much more likely to hit that trend line. I would have gone short there and wrote it down. But because that did not happen, I had to wait for confirmation of the move down. I had to wait for 5 waves down. Just kind of waiting for that structure to show me the direction, rather than waiting for that level to get hit. I had to short on the way down. So what am I saying here? So yeah, I'm going to explain the scenarios here. So here, this could be the B wave. A, B, C, move up into that region. So you already have two incentives to move here. You have this level, which is going to act as a diamond wall, and likely will be the top, as well as this 0.382 level that also acts as incentive to retrace to, and this lines up with this macro count wave 1, 2, 3, 4, 5 going lower. So it's an interesting scenario because you need confirmation of where this wants to go. So I'm showing you my preferred scenario as well as the other scenarios. So you got your ABC up, and that would line up with this 5 waves down, but you can also move up to, this could be a gigantic correction here. So in the case that you already finished this downwards move, you get some like monstrous move, something like this. So that's just the general idea. Near 390, 400, that's what you could be seeing here. So and last reason, well, the last incentive. So let me put this up. This lines up with that 380 area. Yeah, 382, right underneath that line. So 3 reasons here. Actually, I also forgot to do this one, which is something I also like to do for confirmation. That lines up with that 380 region. So a lot of reasons to move up to that 3800 area on ES, but near 380 on SPY. So I think that's all I have for this video. Everything is really pointing. Okay, so to keep it simple, it is bullish unless it does not hold. Let me take everything off quick. So also you have this expanding triangle, so you could test this trend line like right around here or something. So you've seen my scenarios. I'm going to take them off and explain this is the most important thing to know. So you're holding this trend line here right now, but you need to hold the golden pocket or the 0.618. This gold line right here, which we had a double bottom off of. If you break underneath this, what I will be doing is closing my longs and just kind of sitting and waiting. It's likely that we go lower. Maybe new lows go to 3450. That's the next level. But I think the downside is limited because this counts as a corrective wave already. So this in itself can be a corrective wave, and that would give us a corrective wave before the last wave down, before giving us a bigger wave up. So I'm turning